we're going to start now. Let me introduce Tim Hwang. Tim Hwang is a superstar. He's one of the top young entrepreneurs. Tim's a native of Montgomery County, Maryland. Good morning, Tim. And he is the CEO and founder of a company called Fiscal Note. We'll go into that momentarily. And the company is basically a news company. They've raised quite a bit of capital, over $200 million to date. Tim has made some acquisitions, pretty significant brands. He has a global operation. He has 5,000 employees. He's one of the largest employers in the District of Columbia. And some of his investors, and I'd love to hear more about it, include some top names in technology nationwide, including Mark Cuban, Jerry Yang, Steve Case, NEA, the largest VC firm in the world. So, Tim, thank you so much for joining us, especially during these days.
Yeah, well, thank you for having me.
Yeah. And for those of you who have questions of Tim, you can feel free to, you can put them on the chat, or you can send them on email. We do have a number of questions from Tim from the audience that we had requested previously. We're trying to curate the questions because we didn't know how this would work in this kind of a format. But Tim, can you give us a few minutes of background? You know, where were you born? Where were you raised? And, kind of get us to the point where, I know you started your career in your early 20s, but get us to the point where you completed school.
Yeah, absolutely. Well, first of all, thanks everybody for joining here. I appreciate the unique circumstances, of this, very cool event. So, for me, it's just a little bit about my background. My parents immigrated here in the mid '80s in South Korea, amidst a political crisis, and they came here obviously for better life. They came here in search of kind of trying to create a better economic situation for their family. And so I was born in Michigan. My father was a biotechnology, biophysics professor out at Michigan for quite a while. He went over to Johns Hopkins, was working for Bell Labs quite a bit. That's sort of what brought me to the DMV region. Very early on, I think I moved to this region maybe when I was 3 or 4 years old, and started to have a very sort of unique interest, I guess, in a lot of different things. But I think technology was something that I was very drawn to from a very early age. One of the things that I was particularly interested in as I was growing up was sort of how technology would play into sort of different political contexts. And I remember, literally, whether it was the election of 2000, sitting in front of the television, late into the night, when they're sort of counting all the ballots down in Florida. And then even through sort of the tumultuous shifts in 2004 and 2008, when a lot of the technological trends that we sort of have come to realize around social media and mobile technologies and whatnot first started sort of making their penetration into presidential politics. And so I remember, sort of when I was very, very young, kind of even in middle school, was very, very engaged in the political process, had worked pretty extensively, in supporting different congressional candidates, working on, local political parties, working for the state's attorney's office and the like. And I had this sort of concept of wanting to go into government and wanting to go into public service very, very early on. I think that, for a lot of young people, the sort of the catalyst political event, of their lives was probably the political election of Barack Obama back in 2008. And I remember, a bunch of my friends who were sort of pulling me into working on this campaign back in 2007. And so ended up working on the campaign, and obviously that ended up turning pretty well. And so, I remember sort of getting a true sort of a unique taste of what a decentralized and kind of, almost like the first taste of a startup organization, but really working through kind of what that looks like. And so, that I believe about 15 or 16 when I joined the campaign. Pretty interesting time. But there was at the time, when I was 17, there's a seat that had opened up on the Board of Education of Montgomery County, Maryland. And so decided that I was going to sort of throw my hat into the race. And much to my surprise, people actually decided to vote for me. And so I served there for, during that time period, I think back in 2009, 2010. And really got a sort of rough and tumble lesson on state and local politics. And so, maybe I'll stop there. But I decided, very quickly after that experience that politics was definitely not for me, and started, thinking about what I wanted to do next. And so that's sort of what drew me to the technology side of the house.
Yeah, so I have a couple of questions to that. First of all, what drove you to run for the education board? Okay, well, was it just a horrible experience in high school, or was it other reasons? And the other question I had was, when you say rough and tumble, are you saying that it's as brutal as we're seeing on the national scene?
I think that, for me, thinking about what I want to do, it really comes down to kind of impact, right? So, for every marginal unit of time, how do you actually result in, the maximum level of marginal impact for the world? And, I felt like there was a handful of industries and roles and capabilities that you really could essentially sort of transform different elements of things that you're very interested in pursuing, right? So politics to me is an extremely lazy approach to doing that. If you really look at it from a marginal input, marginal output perspective, you get elected, raise your hand, push through some legislation, you impact the lives of millions of people. And I think technology is very similar, actually, in the sort of outsized, significant impact that it has on so many people that are using your products and your services. And so, from my perspective, that was really what kind of drew me to the political scene in the first place. I think that local politics in particular is pretty interesting because the personalities are much more crystallized, and things are much more personal. And so I think that I wouldn't classify it as particularly polarizing, but it was a very interesting time for everybody who was sort of following local and state politics, particularly in this region back in 2008 or 2009, the challenges that existed around education funding in particular, and the drop-offs that we're seeing in terms of tax revenues as a result of drop-off in property price and the like. I think those are very acute challenges that you need to face, I think, particularly in some pretty aggressive downtimes.
Yeah, no, that's great. And then what gave you the idea to start Fiscal Note? And what did Fiscal Note do at the beginning? I know you're a lot different today than you were when you started, but what gave you the impetus or that spark of, hey man, let me go do something different? You were very young at the time, right? You just gotten out of college and you had a taste of politics, but what was it that got you thinking, hey, I can do something to really make an impact here?
Yeah. So, for me, I originally sort of started off, really trying to understand sort of this intersection between politics and technology. And so I was studying, at college over at Princeton, and I was really thinking about how to sort of combine those two interests. So initially, candidly, at a personal level, I was thinking about going back into government, working more closely with the second Obama administration around kind of internet policy or foreign policy as a result of pushing digital diplomacy and all these different concepts. And
this was around what, 2012-ish?
This was around 2011, 2012. Okay. I remember sort of thinking and having this epiphany around trying to really think about if there are any more innovative sort of private sector approaches to actually building a business. And so, I think, when I was, 21 years old, I, grabbed a couple of my buddies and I said, well, why don't we start a company? around what I think is probably the largest challenge that exists in the government and political sector. And that was sort of information asymmetry that existed. And so, if you remember, back in 2000, the late 2000s, the kind of early 2010s, the technology field in particular was quite tumultuous as a result of different changing regulations. You open the newspaper, and you would see, Uber was getting banned in Austin. Their executives are getting criminalized in France. Prosecutors going after Airbnb. Companies like Zenefits getting slammed by regulators in Arizona. And I think this was the sort of start of some of the Theranos stuff that was kind of coming along. And so I was thinking to myself, like, holy cow, I mean, Silicon Valley really doesn't understand Washington. And they really don't understand how government regulations impact their businesses. And so, you kind of peel back the onion and you realize it's not just a problem in Silicon Valley, it's just very acute there. You realize, for instance, that, the president was trying to pass changes in the minimum wage, or changes in the Affordable Care Act, and you would look in public equities and realize that the stock market doesn't necessarily reflect exactly what the proposals are coming out of Washington. And literally, you turn on CNBC every morning and you realize that Wall Street literally has no idea how to interpret some of the stuff that's coming out of Washington. I mean, even to this day, and so. That you have this massive level of volatility that doesn't really need to exist because of this massive information asymmetry that exists. And so we wanted to essentially start building a product that aggregated laws, regulations, court cases, government filings, government documents, and make it very easy and accessible for the private sector to be able to understand how laws and regulations are changing and how it impacts the businesses. And so moved out to Silicon Valley. We bootstrapped a couple $1,000. We were living out of a Motel 6 for a couple of months, and because we couldn't afford an apartment in South Bay. We built our first product probably in about 2 months. We coded it up. It was basically what it did. It was an aggregator of state legislation. So we would take all the legislation that was coming out of every state legislature across the country, make it searchable, alertable, put notifications on top of it. A lot of people do some very basic workflows on top of it. And that was it. We were kind of off to the races. And so we got our first customer in the first 4 months. We generated, a little under $1 million in the first year of doing business, and just, kept scaling and growing the business ever since.
That's awesome. And did you have high confidence when you went ahead and did this product? You got your first customer in 4 months, you did $1 million in revenue. That's pretty good for most startups, I must say. Who were your customers initially? And, was it a Silicon Valley company? Was it a Wall Street company that actually needed to learn more about what's going on in government?
So that's the interesting part. So we found that most of our customers were actually coming out of Washington. And so our first customer was ironically, and we were in Silicon Valley, and we were, I was finding myself flying back home, to DC. And so, first customer was a defense contractor, and then you had, a large political nonprofit, and then a trade association, and, another kind of big healthcare company. And so, I remember thinking, maybe right when we were about 8 or 9 people, that we should probably move the company to Washington, just given the level of interest that's coming out from the customer base there. And so this is back in 2013 or so. We essentially moved the company's headquarters out to Washington, and just we've been headquartered here ever since.
Got it. So how did you fund the company initially, and then what was your first sort of angel round? I mean, we'll get to the fact that you've raised 230 or 260 million, but initially, just to get off the ground.
Yeah, I mean, I think we did a variety of different things. Obviously the first and foremost is sort of friends and family, right? So you're working, with bootstrap summer savings from families, kind of close to you. I think we had won a couple of sort of small university, startup competitions that provided a couple $1,000. We were working in a co-working space that, provided a couple of $1,000s as well. And so we had, probably at the apex of our pre-seed career, maybe about, 20 grand or something sitting in the bank. And we were doling ourselves out something, in the order of $500 a month. That was kind of the salary that we were paying ourselves. And I think, we were trying to, basically sustain the business, kind of using as little cash as possible, obviously to grow and scale the organization.
All right. And at what point did you start raising more and more capital, and for what purposes?
Well, I think that, we obviously wanted to start, scaling the business from a sales and marketing and R&D perspective, right? So, we had a first concept of a product. We wanted to obviously build out, a lot of the initial kind of features and functionality. We wanted to go off and start hiring a couple of salespeople, putting in place some operations and the like. And so I would say probably in the first 6 to 9 months, we said that we were going to go off and try and build essentially a seed round to go off and have the budget to scale the business. And so I think initially we were trying to raise about $740,000, which we had sort of budgeted to be about a 12-month runway for the organization. And that kind of ballooned on an oversubscribed basis, I think, to about 1.3 million, when we first raised our first round of capital.
Well, that's great. And is it true that you cold emailed Mark Cuban, the shark, and out of the blue, and that he responded right away and he invested pretty quickly? Can you tell us that story, if it's true?
Yeah. So I remember we were watching Shark Tank or something, and I remember, saying to my co-founders, something to the order of like, wouldn't it be really cool if Mark Cuban, ended up investing in the business? And so, Mark's not a very, he's not an inaccessible guy. He's actually quite accessible. So, what we did was we, literally went on Google. We typed in Mark Cuban email, and found his email on his Access TV website on the Contact Us page. And so shot him a quick email. I think he responded within the first 45 minutes.
Wow.
And, we were basically said, hey, Mark, here's our background. Here's what we're working on. I believe the subject line was something like changing government. And we ended up, obviously, going back and forth, and probably in a couple of days, he said, I'm in. And I said, okay, well, so how much are you in for? He said, I want the entire thing. So
which was how much?
This was the first $740,000 in the business. And so you wrote the first check into the company. Mark has been a great investor and partner, ever since. Since then, I think in that particular round, we had Jerry Yang, NEA also kind of joining into the round. And then the sort of Young Entrepreneurs Fund from First Round Capital, which is sort of how the full kind of round ended up rounding out. Probably this was fall, winter of 2013 or so.
Wow, that's a great story. And then, so as far as the big names in your group, Mark Cuban, Jerry Yang, Steve Case, and others, who's really active? Who do you get to talk to from a sounding board standpoint?
Well, so we have a wide variety of investors beyond obviously the sort of angels and individuals, right? So we have folks like SoftBank is an investor, S&P Global is an investor, the Economist Group is an investor, Ren, all these different sort of corporate institutional folks. So I think obviously, as we kind of grow in the business, we have been able to continuously scale the organization and the governance sort of framework that exists around the business as well. So our board is fully independent. We work very closely with obviously our major institutional partners around things like acquisitions or growth that sort of are required in the business. I would say at this stage, probably more than one major shareholder. Our board is a group that I'm in constant communication with, and we work pretty extensively with our board, who represents For instance, we have a board member that represents Temasek, the Singaporean Sovereign Wealth Fund, and the like, that we work, extensively around, even just the mundane things around, tax and audit and, governance and nominating and whatnot that exists on any board.
Right. So you guys were chugging along. You got some great angels. You're giving you great guidance. You're getting traction. You found this market that was completely untapped, first mover. Tell us about the next stage. You wound up at what point did you decide, hey, there's bigger opportunities out there. There might be some M&A. Let's go raise bigger amounts of money. If you could just walk us through sort of your identification of the opportunity and your thinking about capital for that.
Yeah, I think, so it's a very complicated thing, to think about, sort of dilution and ownership and kind of what that means in terms of, accretive value and whatnot. Obviously it doesn't change with whether you're a public company or not, but, as we think, about kind of continued growth, I think, the early stages of growth are quite simple. You build a product, get it to customers, price it correctly, position it correctly against the market, keep scaling the business, keep hiring correctly, put the right management team in place. So in one sense, there's a lot of resources online that, that sort of help with those contexts. I won't regurgitate most of it, but I think that, I found that the early stages were actually, quite uniformly simple. And if you were to really just break it down, it's, build a good product, get it to your customers and make sure that they're happy. And, build a good team essentially around, making sure that those two things are right, that you're building a good product and you're making your customers happy. So, financing is an interesting concept because, really there's so many different, avenues for financing, up and down the capital structure and with respect to different types of financing structures. You've got everything from, government grants, SBA loans, senior credit facilities, mezz credit facilities, convertible bonds, preferred equity, common equity type structures. And I think that, candidly, we've been very creative at our company about, leveraging every type of financing source in the most non-dilutive sense for the business, depending on whatever goal we wanted to achieve. So if the goal was, hey, we're going to take on this relatively high risk venture, we don't have a fully baked product. We want to build a team. That's extremely high risk, and obviously, the best way to kind of structure a facility like that is through either convertible bond or preferred equity, capital raise, which I think is the kind of standard pathway for most Silicon Valley cap raises. Then you start getting mature, and 2014, 2015, 2016, we just keep scaling revenues. We're tripling revenues year after year, doubling the team year after year. You have a consistent level of revenue generation. It's all subscription revenue, so we're not some e-commerce business or something. Our business is contracted out multi-year, government and corporate contracts. You have some visibility into renewal rates and retention on a year-over-year basis. And so you're basically just compounding growth year after year. We're essentially going off, and we have some level of visibility on things like sales efficiency, right? So, for every dollar of sales and marketing that we put in, how much revenue are we going to generate, and how much of a long-term values that generate for us as a company. So if I put in $1 million, into hiring, 10 new salespeople, how much in recurring revenue is that going to generate? Assuming a steady state of renewal rates, as long as that base of customers renews at 90, 95, 100% year over year, then you're talking about, 5, 10, 20 years of contract renewals on an average basis that you can essentially bake into the economic value of the business. And so the formula becomes very easy at that point. I think at that level, the universe of kind of funding sources begins to open up. We started leveraging kind of some of these recurring revenue facility lines that a lot of the kind of non-bank lenders are starting to put out there. We started to think about, different M&A tactics as well, right? And so to your point, to me, someone asked me the question the other day, sort of, what is the 5-word answer to capital raising? And I said, fundamentally, entrepreneurship, wealth creation and entrepreneurship is actually, the formula is very simple, right? It's wealth equals value times ownership, right? So what fundamentally you have to do is you have to maximize your ownership and maximize value, at the same time. And so, we think about sort of M&A in the context of that equation. When we think, okay, I can go raise another 50 or 100 or 200 or $500 million, in the equity capital markets at a certain valuation, that results in a certain level of dilution. And you can basically mathematically model it out, assuming that, we spend, X amount on R&D and Y amount in G&A and the remainder amount in sales and marketing. What does that essentially result in, in terms of sort of economic value for the business? And you have some semblance of sort of what that equation looks like. I think, with respect to our M&A strategies, we sort of said to ourselves, okay, if we construct an M&A strategy that basically is capable of ingesting a new business at a lower cost of capital, and a lower level of dilution, and creating a certain level of economic value at the other end of the equation. And I think that, the answer is quite obvious, right? Because you go back to that fundamental formula, which is, wealth equals ownership times value. And so, we've been very calculating in terms of, how to essentially run that equation, how to finance certain acquisitions, and how to structure these deals in such a way that, minimizes dilution, maximizes ownership, and maximizes economic value. And candidly, I think, the last thing I would say on M&A is that we have really thought a lot about execution risk. And, from my opinion, 99 times out of 100, even startups in the late stages will misplan. And it's usually some function of, hey, we overinvested in this product line, we underinvested in this customer segment, we didn't hit R&D delivery deadlines. It doesn't matter if you're Series C startup or if you're Apple Computers, like everybody misses their plan. And so I think that, we thought about what that execution risk looked like and how to de-risk ourselves from an M&A perspective. And so a lot of people don't know this, but, when Jobs returned back to Apple, one of the first things he did was, cull internal operating expense. And the second thing that he did was just go on a massive acquisition spree to shore up the product base for Apple. And so I think that, we think a lot about what the great opportunities that sort of exist out there. We're very, very interested in obviously trying to make sure that we're delivering more value to our customers and also, creating a lot of value for our shareholders as well.
Right. Can you talk briefly about, so thank you for that on the M&A side. I appreciate that very much. And how much money have you guys raised to date so far? And what percentage of that has been used for M&A versus sort of organic and internal growth?
So we've raised now about $320 million across all the different sort of financing structures. I would say about 180 million, or about 190 million of that has been used for M&A across the business here.
Right. And I know it's very uncertain out there, and I do want to have a couple of questions about, what you see in the windshield here, but what is your strategy going forward, with respect to the business strategy itself and the capital markets, assuming that we can get to some level of normalcy in the next, say, 6 to 12 months? That's a huge assumption, of course.
Yeah. We're right now we're sitting on a pretty decent war chest, in terms of kind of what we're, what we're looking to deploy, in terms of, capital and the like. And so I think we're making a couple of sort of internal assumptions around, sales efficiency, retention, what we want sort of, capital investment to go into, what we want sort of M&A strategies to look like. Our strategy on, the sort of core business is quite simple. We're continuing to add more data sets, in terms of new countries, new regulations, new government agencies that we're kind of bolting on. We're also building out new capabilities in terms of allowing our core customers who are kind of chief legal officers, general counsels at major companies to have more and more functionality. So be able to do more with regulations, understand what the implications are, do more analysis and the like on our platforms. And then our M&A strategy is actually no different, right? So in ways that, in areas that we think we can accelerate our current plan, whether it's entering a new geography or adding a new data set or whatever the case is, new customer segment, we find that there are a lot of great opportunities for adjacent investment as well.
Right. We do have some. We started a little bit late, so we can keep running. I know let's go for a few questions. So we have a question from one of your investors, Mark Walsh. Hey, Mark, how are you? Mark wants to know who you consider to be your main competition.
Yeah, I think that one of the biggest things that we find in the market is, we are part of this sort of wave of enterprise digitalization. And so, we usually come into a business and find this scenario, right? Maybe it's I'll give you a good example. We were at a ride sharing company the other day. I won't say which one it is, but it is a big ride sharing company, based in the United States. And I asked them, how do you monitor all the different laws and regulations that impact your business, right? You've got ride sharing, food delivery, autonomous vehicles, data privacy, online payments. Each one of these categories is such a monumental level of risk, for the business. And they pointed me to a Dropbox folder that they had. And in this Dropbox folder, they had 50 different Dropbox subfolders where they had hundreds of lawyers copying and pasting, manually copying and pasting laws into Word documents, and then sharing those documents with internal compliance and operations and product managers. So honestly, I was pretty stunned because, in a lot of these companies, this should be pretty forefront in terms of thinking about regulatory context. And, you think, you kind of write that aside and say it's startup and, they're kind of still learning along the way. I've seen the case at Fortune 100 companies where literally they've got a SharePoint and they're copying and pasting laws into an internal Wikipedia, trying to stay on top of all different regulations. And I know that we haven't said the word, explicitly, but, honestly, this COVID stuff is pretty fascinating to kind of see from our perspective, because so much of the private sector right now, pretty much the entire private sector is dependent on what the government is going to do, what the legislatures, not only in Congress, but in the EU, in different state legislatures and city councils and whatnot are doing to the private sector, the trade-offs that they're making, the implications that it has for corporate America, but also small and medium-sized businesses. I think that if you don't understand policy right now, then you are way behind the curve. And so, to be totally candid, we found that this environment has been a great accelerator for the business. And we've seen, accelerating sales cycles, increasing contract values across the board in all the industries that we operate in. But to the fundamental sort of point around competition, I think fundamentally it comes down to what are they fundamentally doing right now. And it comes to some level of outside counsel, law firms, consultants. What are the cases? So I was sitting with a fast food retailer, earlier this week, and I was asking them, okay, well, how do you track right now, in which cities and counties are getting shut down? And there's no simple answer. They're just triaging on regional conference calls, with a bunch of different outside counsel, who are advising them, on a city by city basis, which I thought was a pretty ridiculous approach to, such an evolving situation. So I think that, for us to be able to take all these laws and regulations, synthesize them and make them searchable and available, something that we found is quite compelling to our customers.
Great. Thank you for that. Now, speaking of coronavirus, looks like, are you in the office right now?
No, I'm sitting in my apartment.
Oh, okay. I saw an office building behind you. I was wondering, but it
is Crystal City. So,
so how are you dealing with this? You have 5,000 employees globally. You a lot of families are depending on you, obviously. how has Fiscal Note addressed this from an internal standpoint for your team?
Well, for us, our organization has been fairly distributed, and so the remote work is actually quite easy to do. I think that for us, transition to all remote hasn't been too challenging. We do have some teams out in Korea, out in India right now that are facing. I think we're facing different parts of the curve, very, very to be very blunt, and so we've been monitoring the situation since January, so it wasn't really that much of a surprise for us. I think about 2 weeks ago, we actually transitioned the entire business to all remote, and it actually didn't really change that much for the business. I think, from a customer perspective, I think that we've been very engaged with our customers, and our customers have been glued to their devices, on the Fiscal platform or, in other sources, just trying to make sense of, the first three phases of the stimulus plan. It sounds like there might be, phase 4 and phase 5, the Fed's sort of response plan, state and local response plans, but that's just in the US. I mean, we've got changing dynamics in Europe, in Latin America, and Asia. A lot of people forget, yes, McDonald's is an American company, but they've got a tremendous number of operations globally that doesn't sit here in North America. And so if you're sitting in Chicago right now at a major fast food company or a medical device company or oil and gas company in particular right now, I would say that your level of attention on what's going on is, just think about the level of complexity that's happening in the US, and you multiply that against every country on the planet, and the pace of change that's happening, at a city and governmental level. And so I think that we have generally found that, coronavirus for us, has been sort of an interesting test for, how much, how much you can stress the regulatory changes as much as possible and what that means for our business.
Yeah, no, that's great. And by the way, we are up to 358 people today online. So thank you guys for joining us. And for those of you who joined late, you can download the program book, which has Tim's biography, as well as the executive summaries for all 8 presenting companies who will be starting pretty soon, and the list of attendees who had registered as of yesterday afternoon. And the website is CONNECTpreneur.org. And you can just go right on the website and download the program book. Tim, we have another question from Seema Alexander. Seema, thank you for this question. She is the Chief Marketing Officer of LexDen Capital, and she has a question regarding the advice that you would give to other entrepreneurs, technology entrepreneurs in this environment. And I know it's very specific, but I'm sorry, it's specific to the situation, but from where you sit, what kind of advice would you give to us entrepreneurs who are out there wondering what to do or looking for opportunity?
Yeah, I think there's sort of two things. One is a very practical matter, and the other is sort of strategic. And so I think the practical matter is that we are entering into a period where the capital markets are going to be a little bit choppy for a while. Every CFO in America is doing the same analysis right now, which is how much cash do I have, and how much runway does that afford me? It doesn't matter if you're, Delta Airlines or General Motors or whatnot. I mean, or a Series A startup. Everybody's doing the same analysis. How much cash do I have? What does that mean for my business? And I think that's the very practical matter of a situation where, to be totally candid, the capital markets have not shut off. The venture capital community is still allocating capital. Private equity is still looking at deals. There's a lot of uncertainty though out in the market, and we don't know what that translates into just yet in terms of capital market activity. I think that opportunistic investors are still going to be very aggressive in the market. And particularly one of the things that I'm observing in our business is the sort of resurgence of Asia, particularly from a corporate sector. And so we're seeing a massive rebound in terms of China, in terms of Korea, Singapore and the like, that have been able to get the virus not completely, but somewhat under control. And so I think that as a practical matter, you've got to preserve cash right now. I mean, as a business, and cash is not just cash for sort of having it on your balance sheet. Cash means optionality. It means the ability to be flexible, the ability to forward invest or under invest or make acquisitions, whatever the case is, and just be very flexible in terms of what those options look like.
Right. And you have great visibility to Korea and Asia. You have operations there. You have a lot closer view as to their recovery than we do. Do you think that they will serve as bellwethers for our economy, in a sense that if we're seeing a V-shaped rebound from their recessions, do you anticipate that we have a good shot at that as well here in the U.S.?
Well, I wouldn't draw too many extrapolations from Asia, just because the economic and political systems are very different. So, for instance, in China, you've got a lot of state-owned enterprises that can unilaterally start hiring, tens of millions of people very aggressively. And so I think their recovery may look a lot more V-shaped than in the U.S., where people have to, I think the sort of short-term structural challenges that exist in the economy, are definitely going to be challenges. America is much more private sector led, and that's good and bad in different cases. It's it enables great innovation and R&D investment and the like. But this environment, those things are going to get slashed for at least 6 months, up to a year, possibly more, and that's going to definitely result in lag in the future. I think that right now, though, respect to the capital markets, Asia-based investors are allocating capital. They are getting very aggressive right now, looking at sort of value in the markets. And from the understanding that I have with, pension funds, family offices, insurance companies, sovereign wealth funds, they're starting to get very aggressive here. And so the fundamental underlying question that everyone has in their mind, with respect to the situation is, can the United States government and the United States get this virus under control? And that's beyond any stimulus question, beyond any economic question. The fundamental question is the public health question. And so that's going to be the main driver of whether or not we sort of see, some level of significant economic recovery. But I think going back to sort of practical matters, look, so cash preservation is very important right now. Being very judicious about kind of capital preservation and raising it is important. The sort of sub bullet point I would say below that right now is that the government is going to be pumping a massive level of stimulus, particularly for small businesses. And we're talking everything from, deferring Social Security payments, payroll tax credits, SBA loans and grants, that the government is essentially turning on the spigot for capital. And they are encouraging as much as possible, not only at the federal government level, but also at the state and local government levels, for people to take advantage of these opportunities that exist out there. I think secondarily, this is the more strategic question, which is that there are going to be businesses that benefit from the situation. And the question is sort of how you position your business, the value proposition that you have to address the challenges that organizations have today. And I think that candidly, for the startup community, on a net basis, some of the strongest companies always come out of, sort of deep economic recessions. They're very nimble. They take advantage of certain changing opportunities. If you think back to sort of the Ubers and the Airbnbs and whatnots of the world, that generation of startups was primarily built off of the structural pent-up demands in the sort of labor element of the economy as a result of the Great Recession in 2009 and in the recovery afterwards. And so I think that there are always going to be opportunities. And really, you got to think very critically about where those opportunities exist and how to actually turn those into tangible business ideas that generate value for customers.
Excellent. I expected nothing less from you. I love the forward-thinking optimism. We'll have time for one more question, and then we'll turn it over to our rocket pitch hosts. But Tim, Esther Lee, who's a mutual friend of ours, she's the CEO of Refraction, which is also our latest sponsor. Thank you, Esther. Has a more personal question, Tim. She wants to know who your most significant mentors are.
Well, I think it depends. I mean, on a personal level, obviously, my parents came here from South Korea, and the concepts around kind of, staying positive and optimistic and looking for value and opportunities and trying to kind of continuously push forward and having that resiliency, I think, is something that I speak to my parents quite a bit about. From a business perspective, I think I've been very fortunate to be able to work with a variety of different individuals that have really shaped my career, along the way. One of our board members in particular, General Stan McChrystal, has been very, very instrumental, particularly in these very choppy times. So Stan, I think, he likes to tell these examples, when he was in Afghanistan, sort of leading the U.S. Allied Forces, around how they would get on these massive, 7,500, 9,000, 10,000 person virtual conference calls, how to triage information in a chaotic environment. In this case, I think, we're not talking about sort of coronavirus and the impacts that it has on businesses, but we're talking about real lives and national security and the like, right? So the stakes are slightly higher. But I think in our case, folks like Stan and some of our investors, Mark and Jerry and whatnot, have been very, very helpful, in really navigating through both the early challenges of the business, but also these kind of macroeconomic environments.
That's fantastic. Yeah, I mean, you're very fortunate to have a blue chip list of awesome investors and advisors. And, I really applaud everything you're doing, and I wish you well. Hopefully the capital markets will turn soon and you guys will be on your tear. Tim, I wanted to, on behalf of everybody, thank you for spending your morning with us. Maybe you can stay on and people can private message you if they have specific questions. I do want to say that you can download the program book again off of our website, CONNECTpreneur.org. We have 355 people on the call. Thank you guys all for joining us. Tim, thank you so much for joining us this morning. And, we'll be back in touch, but wishing you and your family all the best in this environment, and be safe out there.
I appreciate everybody having me on here. I appreciate the time.